Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the triple exponential moving average. Okay, if you are a fan of the moving averages, you know the moving average is one of the most common indicators used in the Forex market. Like a lot of traders use the moving averages, right? It's a trend following indicator, it's very nice, it gives you an easy way to spot trends, an easy way to spot exit and entry points, right? So a lot of traders use it. Even complete beginners can use moving averages. But now we are talking about triple exponential moving average. Okay, it's quite a modification of the standard moving average that you know. Okay, the triple exponential moving average is also used for identifying market trends with precision. Okay, it's a custom indicator, so you need to download it if you want to use it on your chart, right? You need to download it and add it to your indicators library. I'm going to be adding the indicator to the chart right away because I have already downloaded it, of course. And this is how it looks like. Okay, this is how it looks like, right? So this indicator, the triple exponential moving average, for short, TEMA, TEMA, right? It actually gives more weight to recent price data, all right? The TEMA gives more weight to recent price data. So it tries to eliminate the lag that is commonly seen in traditional moving averages like the SMA and the EMA. Okay, so the TEMA ensures that you stay aligned with the current trend. Okay, so now a few of the things that makes the TEMA to stand out include enhanced trend detection. Okay, in as much as the manner of giving signals quite resembles that of the standard moving averages, in the sense that when you have the price trading below the moving average, it's a sell trend. And when you have the price trading above the moving average, it's a buy trend. That is how moving averages function, right? And when you have the price cross below the moving average, it's a sell signal. When you have the price climb above the moving average, it's a buy signal. It's the same, right? The signals are quite similar, okay? But this TEMA goes a step further by changing colors as well. As you can see, there is a red color and there is a green color. So the red color can signify a change in momentum, okay, in the upward direction, while the green color can signal a change in momentum, right, in the downward direction. Okay, as you can see, when the price is going up, the red color shows that the market is going up and it is serving as a dynamic resistance. So the red color serves as a dynamic resistance, right, when the market is going up. Okay, in a trending market, in a bullish trending market, to be precise, in a bullish trending market, you can see the red color serves as a dynamic resistance. Then the green color will serve as a dynamic resistance but a pullback. So the red color indicates impulse move, while the green color indicates corrective move. Okay, now let us look at a sell trend. Let us look at a sell trend. In the case of a sell trend, you can see the green line is serving as dynamic resistance, right? Serving as dynamic resistance. The red line is serving as, in this case now, the red line is serving as a dynamic resistance but showing corrective move, while the green line is showing impulse move. Okay, remember that impulse move is the move in the direction of the trend, while corrective move is just a pullback. So when you are trading in the direction of the trend, pay attention to the color changes. Okay, when the color changes to green in a sell trend, just know that it is in the direction of the trend, so you can go ahead and enter a sell. If you are a scalper, right, if you are a scalper, you can exit your sell when a red color appears, and when a green color appears, you enter another sell, and like that you exit when the red color appears. Or you can even buy, just buy the, take advantage of the corrective move and exit once the green color shows, and then you enter a sell and exit when the red color shows, and enter a buy and exit when the green color shows, like that if you are a scalper. But if you are a swing trader, you might just want to ride the trend till the end, just once you get your sell confirmation, perhaps right after a bullish trend, once a sell reversal has started, just enter your sell and just ride the trend till the end until you get a bullish reversal again. So basically, using this indicator is quite straightforward. Okay, once you've identified the trend, personally, I will recommend using the indicator to trade trending markets. Okay, because in a ranging market, you can get a lot of false signals. So when the price is moving in the direction of the trend, just ride the trend. Okay, if you are a scalper, then you can do your thing. You can sell and buy even within the trend. All right, but just make sure that you are using good risk to reward ratios. Okay, so for example, if you sell at the site of the green line, when the line changes color to green, indicating the impulse move in the direction of the trend, you can go ahead and sell, set your stop loss below the previous swing high. And for your take profits, if you are a swing trader, you can just decide to use support levels. Okay, for example, support levels like this. Now, because this indicator reacts fast to price changes, you might not be able to use it to, to confirm your trend reversals, unless if you go ahead to change the period. All right, you can see periods here. So, if you increase the values of the period, you might, slow down the rate at which the indicator reacts to price changes. But if you're going to be using the default settings, which is actually fine, right, then I'm going to recommend using support and resistance levels to confirm your exits. Okay, so if you're a swing trader, that's if you're a swing trader. If you're a scalper, you can be using the color codes, right, the color changes to enter and exit your trades. But if you're a swing trader or a day trader, once you've entered your trade, after you've confirmed the reversal, right, because you want to ride the trend from beginning to end, okay, even if you join the trend late, right, so long as you're in trading in the direction of the trend, you're good to go. And then once you have confirmed a reversal is happening, perhaps you can use trend lines. You can also make use of momentum indicators that show you overbought and oversold territories. For example, you can make use of the stochastic oscillator, or the MACD, or RSI, any momentum oscillator, or in fact any other indicator of your choice. Actually, you can use any indicator to confirm your exits. So in this case, we had a bullish breakout. This is a trend line, right? And we can see that the bullish structure was broken, and we began to have a sell structure here, although we had a double bottom here as well. So you can see that this shows that bullish momentum is now building up. This is even a consolidation pattern. So this shows that bullish momentum is building up. So at the side, that's the reason why it's good to pay attention to chart patterns and candlestick patterns as well, in addition to the indicator. So for the fact that we are having a bullish reversal chart pattern here, it's already a signal to exit your sell. All right, if you're a swing trader, it's a signal to exit your sell. So if you had entered your sell trade around here after you confirm the bearish reversal, let's say you entered around here, then this would have been a good place to exit once this bullish reversal pattern began to form. You can see this is a bullish structure. This is a low, this is a high, this is a lower, this is a higher low, this is a higher high. So a bullish structure has already begun to form around here. As you can see, a bullish structure has already begun to form. So once this bullish structure began to form, at the site of the second low, which was higher than the previous low, you should have just exited your sell. Okay, so that is it. This indicator helps you to identify direction of the trend. It gives you color changes, for you to know when a pullback is about to happen. And if you're a scalper, you can take advantage of those changes. Each move can give you some little profit if you're a scalper. But if you're a swing trader, just watch out for reversals. Take advantage of trend lines, take advantage of support and resistance levels. Okay, and then you can also add other indicators to confirm your trade decisions, right? Both entries and exits. Okay, and make sure you always use good risk management strategies. Do not trade it an amount you can't afford to lose. All right, it's very important. In the meantime, thank you for watching. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and do not forget to hit the notification bell so that you don't miss out on more trading videos like this. So that is it for this video. I hope to see you in the next video.